clients are negative, and they're scared because there is so much uncertainty. And I know that that word gets thrown around constantly. The market doesn't like uncertainty. There's always uncertainty. There's a limit to how much can be certain in the world, whether it's the economy or just day-to-day living. But there does seem to be so much additional uncertainty with the current administration. And I think that's by design. Whether you have a positive view of it or negative view of it, I think it's, their messaging it's erratic, it's contradictory at times. I don't know if that's meant to throw the Chinese negotiators off the scent in some way. It's hard to read. And I think that creates uncertainty, not just for the CEOs that have to respond with their spending decisions, but also just people who are market participants watching the headlines every day that drive the market up and down and up and down. And there doesn't seem to be any real traction or direction. And that's frustrating. And I think that the positive angle of that, though, is that people can't really get fully invested into this market. And historically, that's what you see at market tops, is when everybody is positive and optimistic and there's no reason to not own stocks. We don't have that today. So as a contrarian, that kind of gives me a reason to be optimistic. People are not all in on this market. What's the point of tariffs maybe, and where's this going? And everybody's got an opinion what the purpose of this trade war really is. And I think the one thing about tariffs to keep in mind is that my opinion is that it's not a permanent solution. This is a temporary application of pressure that we're putting on China in order to get them to change some of the things that they do that we don't like. The data points are definitely important because it's a sign of what is actually happening. So it's real information, and it's a gauge of what's going on in that part of the economy. I think what people are focusing on is, like you use the word contraction or contracting. The manufacturing index implies contraction, meaning things are not just growing slowly, they're actually shrinking on a year-over-year basis. But the other thing that's relevant, I think, is that manufacturing today makes up the smallest percentage of US GDP in the last 50 years. So it's relevant because it is a sign of something that's going wrong in the economy. But it's not as relevant as it might have been 30, certainly not 50 years ago, when that was really what was driving the US economy. We were building things and we were selling them, not just to companies here in America, but overseas as well. Today, what's really driving the US economy is consumption. And therefore, I think what's most relevant to be paying attention to is the health of the US consumer. So the ISM print was the lowest since August of 2016. And what happened in early 2016, late 2015, early 2016, the US kind of had, some people have called it an earnings recession or a manufacturing recession. It's kind of similar to what we're going through now. And we did not go into an actual recession where the entire US GDP actually goes negative for 2 quarters. What we had was a dip in earnings and a slowdown in US GDP growth. So the growth rate was lower, but it was still positive. And then we had a ramp and things got better. And people point to different things, but there was a big meeting of central bankers in February of 2016 that we still don't know exactly what was discussed, but what came out of that meeting, or what resulted shortly thereafter, was the US dollar stopped strengthening against the basket of foreign currencies. And that provided some relief for asset prices, and it eventually restored confidence among businesses and consumers. What could go right is the trade war could get resolved, or it could, kind of a ceasefire of some kind, where any kind of agreement, that would be considered something that could go right. You also pointed to the fact that it's just industrial manufacturing that is pointing to contraction. It's a sliver of the U.S. economy. It's barely more than 10% of U.S. GDP comes from industrial manufacturing. So there's the big part is the consumer, and we've already mentioned that the consumer is pretty healthy for two different reasons. One, we mentioned that interest rates have come down. They've been able to refinance debt where it's possible. And that goes for people who are refinancing existing mortgages or people who are first-time home buyers. It's inexpensive to borrow money right now. That's always good for the U.S. consumer.